Hi everyone, in today's video, let's talk about Apple stock, its past and present. First, let's look at it from a long-term chart. This is Apple's yearly chart. From that perspective, Apple has been bullish for 7 straight years. Only this year did it start to fall. It's been in a strong bull run for 7 years. After looking at the yearly level, now let's move to the quarterly chart. At this level, after 2 quarters of decline, around this point, there is still no clear sign of stabilization. Now let's check the monthly chart. It looks like Apple may stabilize here. I said may, just looks like it, but can it really stabilize? That's still a big question mark. Because where's the actual support level? The real strong support is around $170. Right now, Apple's high is $259, right? The all-time high is $259. Currently, it's trading at $202. The real strong support is at $170. That means it may drop another $30. So you need to be very cautious here. This price level carries risk. Be cautious with Apple. Even if it drops to the support zone, it doesn't mean it will bounce back right away. It might just hover near that support, moving sideways. Sideways movement along consolidation phase, waiting for direction. At that point, I think the likely direction is still downward. I'll explain the reasons in a bit. Now let's look at Apple's weekly chart. On the weekly level, Apple shows a classic head and shoulders pattern. Yes, a head and shoulders formation. The head looks like a double top, and around here it starts moving sideways. Sideways movement happens because there's some support here, but the support isn't very strong, so after a rebound, it still tends to fall. This level aligns with Apple's strong support, the $170 level I mentioned earlier. That means Apple still has about $30 downside, but that $30 decline won't likely happen in a straight drop from $202. It's not going to fall off a cliff. Instead, it might rebound first, say to around $212, and then drop down to $170, then continue falling toward that $170 level. That's likely the rhythm, so keep an eye on it. Now let's take a look at Apple's daily chart. On the daily chart, it's very clear during this recent rally, Apple barely moved up. It didn't rise when it should have. When it fails to rise, a drop is likely coming. Wave 1 down, a slight bounce, then wave 2 goes sideways, then wave 3 drops again. This whole section looks like a big sideways range, and after that, I think the trend is still down. It's likely to keep falling to find a bottom. It might even break below $170, possibly during intraday trading, so be cautious at that level. Next, let's take a look at Apple's intraday chart. Right now, its price action looks quite awkward. Yesterday, it tried to rally but couldn't break higher. Then it fell, but bounced back up again by the close. It's clearly moving in sync with the Nasdaq index. At this point, Apple is just following the Nasdaq, and it's even weaker than the index itself. It's significantly underperforming the Nasdaq. Look at this recent rebound in the index. Let's check the numbers. The Nasdaq rebounded from just under 15,000 points to about 19,700 points. That's almost a 5,000 point move. So in other words, the Nasdaq jumped 30% in this rebound. Now let's look at Apple's performance in the same period. Let's see, Apple went from $168 to $210. That's a $40 gain. A $40 rebound means Apple only rallied 25%, so it lagged behind the Nasdaq's 30%, clearly underperformed the broader index. So what does this tell us? It means Apple is weak, very weak. Its price action is clearly weak. And when it's this weak, You can't expect it to perform well at these levels. Let's look at the 60-minute short-term chart. It's showing a downtrend too. Apple is clearly in a downward move here. So why is Apple performing like this? Why is Apple once the king of consumer electronics? What happened? The number one, why has it come to this? There are several reasons. Let me explain. First, the real founder of Apple, Steve Jobs. Since Steve Jobs passed away and Tim Cook took over as CEO, Cook has mostly been relying on the foundation laid by Steve Jobs. He's basically coasting on legacy. Think about it. iPhone 14, 15, 16, even 17, 18, 20, all the way to iPhone 30. Have there been any real innovations? No, not really. They're all just building on what Steve Jobs had already established. Everything's just minor tweaks within the same old framework he created. As for Tim Cook himself, he hasn't led Apple to achieve anything you'd call disruptive innovation. Remember these keywords, disruptive innovation. He hasn't done that. Did he at least try? Yes. Let's go over them. First attempt, Apple worked on autonomous vehicles. They tried to build a car. That project failed. It was a failure. Second, Apple also tried to do cloud computing. Cloud computing. That was also failed. Another failure. Third, what else has Apple tried? They've made lots of smaller attempts, including in the AI space. Yes, Apple has invested in AI. They've bet on the AI sector, but they clearly lag behind Google. Not just the Google and the top tier firms, they're even behind many second tier players like DeepSeek and others. Why has such a big company ended up like this? In my opinion, it's because a company is still trapped by its own legacy. First, Apple was already a great company under Steve Jobs, right? So after Cook took over, he's always been operating under Steve Jobs' halo. All these years, for so many years, even after Jobs passed away long ago, they've never stepped out of his shadow, still living in his shadow. Second, Apple's traditional smartphone business is under pressure. Where does the pressure come from? It's from Trump. President Trump asked Apple to move its production line out of China and also out of India and bring it back to the US. Not just the assembly line, but the production lines for components for smartphones and laptops alike. All of them back to the US to make phones and even laptops and their components. All move back to the US, especially to California or Texas. Is that even possible? Is it realistic? I don't think so. I think it's impossible, simply not possible. First of all, in the US, there are not enough skilled technicians. They just don't exist in volume. That's one issue. Second, labor costs in the US are extremely high. If you move production to India, Vietnam, or China, you can still keep iPhones at $2,000 to $3,000 per unit. But if you move it to the US, retail prices will double immediately. That's right, the moment they move production, retail prices may soar. iPhone retail prices may have to rise by 100% to 150%. There's no way around it. Cost decide everything. And Apple is already a high margin brand. Among the world's top 7 smartphone makers, Apple ranks number 1. Among the top 7 global phone makers, Apple ranks number 1. And Apple alone accounts for over 50% of the total profit among those 7 firms. And not just 1 or 2 years, it's been over a decade. For more than 10 years, Apple alone has taken over half the industry's profits among the top 7 smartphone giants. And yet, Such a dominant company has ended up like this. It's honestly shameful. I feel shame too. Has Apple really declined since Jobs left? Did Apple really start declining after Jobs? Well, by that logic, should Microsoft have failed after Bill Gates left? But in reality, Microsoft's done fine. It's still performing quite well. By the same logic, one day if Buffett is gone, will Berkshire Hathaway collapse too? That's something to think about, right? It's something that deserves deep reflection. We should all think about it from a practical angle. From now, we will continue shorting Apple, short it all the way to 170. If you enjoy this content, please subscribe and give it a like. Thank you.